This next part, I wanted to do this for everyone here because I have a lot of people. I haven't even really discussed any of this with Andy, or we haven't ever really spent any time diving in and talking about it or any of those things. But I have a lot of folks that call up and want to know, how do you come up with all this information, or how do you get this part here of the charts right so frequently, I guess I should say, as far as general market direction. One of my rules, too, of trading or speculating, or if you're a producer, I would suggest if you are bullish longer term, I would be very cautious of taking positions on the short side. It's cost me several times. I think it's cost a lot of people in here several times. Prime example recently in cattle. I tried to get cute. I thought, boy, this cattle surely made a run higher. Tried to short some. I knew better than to try and short cattle as I'm sitting here bullish longer term the cattle market. Sure as hell, went home, told Michelle, got smarter today, paid for another course in learning. So got smoked, we got stopped out, and we tried to go against the grain. What I've tried to do, and where I think I'm different from most, and like I said, I haven't really discussed this with any of the traditional traders, I should say, or the guys we used to trade with in Chicago and those things, but I think the game's dramatically changed, period. I don't want to throw anyone under the bus, but the way my mind works, and this is what I'm going to tell you, I want to give this to you guys and see what you can do with it. And I'm just going to tell you how I come to these conclusions in my head and how I see it and why I think things have changed so much and why I don't feel that supply and demand is as important. And I don't think they're reading the coverages of the schemes right. With the sports background, any of you played quarterback or anything, I had an opportunity to work with some great quarterback coaches. You come to the line of scrimmage, and as you break the huddle, you immediately look straight down the pipe to find the safety. The safety's going to be your key. As Jay will tell you, we're going to be in cover 2, cover 3, where we're at, whether we're going to be in a zone or whether they're going to drop up. If the safety comes up here, we got chance they're in nickel, chance they're in dime coverage. So as I break the huddle every morning and come to the line, I got to figure out who's straight down the pipe. And then from there, I will determine where we go in those directions. A lot of people have a problem understanding the players of the game. The quarterback's generally taken first by every team, but who's generally one of the most important picks in the draft after that? Left tackle. Most quarterbacks are right-handed. Left tackle. Left-handed quarterback be a right tackle. Why? You're not going to buy a Ferrari and not have a good garage to put it in. Understand that. You got to know the players. You got to know what's important. What position is absolutely the most imperative. I believe supply and demand no longer play safety. I believe supply and demand's up here playing somewhere like maybe Mike linebacker or somewhere, maybe Will, somewhere in that field, but not safety. I believe when you break the huddle and you're looking straight down the pipe at politics. You get the U.S. dollar right, you're probably going to be on the right side of the trade. Understand the way politics is painted. Understand where volume is coming and money flow is coming. Understand that you got to try and make, as a quarterback, why it's such an important position, because you got about, you look at the play clock, you have maybe 20, 22 seconds to assess. You come up, you take the snap, pre-read, you're going safety, then you're immediately looking left. Read your linebackers across, look right, read your D lineman back across and left again, and you're ready to snap. And you got to make a decision within that time frame, similar to playing catcher. As you do that, similar to the markets, you immediately have to try and process. Are we positive? Is this guy showing this coverage? What are we seeing from these people and these players? I'll equate it a lot of times in the report, whether it's handicapping horses or we're trying to count cards. Andy and I played blackjack together in Vegas. Andy's an incredible blackjack guy. But you have to know how the deck's stacked. Is the deck more bullish or is the deck more bearish? Supply and demand is a small factor now with the way things have played out, so to speak, and moving forward, the way the traders are trading and the macro type views that they're looking at. So I want to give you just a look behind the scenes at my thoughts in the morning as I put this together, how we were able to move to a bearish tone when we went above 750 or 780. And everyone's like, you're nuts. Maybe. But the way I seen it, the coverage has changed. The defense changed. Just like the game changes of football. I could go out there and run power I, like the old grinded out style, 3 yards and a ball of dust. Well, hell, now we're running wildcat and we're running everything else. So the game changes. Traders have to change. You have to understand the way the game's moved. it's faster, just like on TV. NFL's faster. Defenses are different. Schemes are different. Trading world is different. Understand that as we move forward. Traditional thinking's probably not going to pay off, I should say. I talk to this all the time. Games change. Here we go. This is, money flow coming in. We didn't update it, obviously. I say it all changed about 2005. I think some will tell you 2002. I'd say 2005. CME changes position limits. We go from 5,500 to 13,500. All of a sudden, the funds are fired up. The funds are now in the game. Look, positions are changing. Players are moving. We go from 5,000 position limit, 5,500 to 13,500. That's like going from man to nickel coverage. We just flipped. The whole thing just changed. Make the reads. Make sure you understand what we're doing as far as this goes. Same time, 2005, renewable fuel. As Andy says, Tom says, huge game changer. Same exact year, same thing, things started playing out, and all of a sudden we get the explosion higher. One thing we have to remember, zero-sum game. I tell everyone, you have to know the game you're playing. Make sure you're not playing touch football and the New York Giants are coming to town with all the right gear and equipment. So you think you're playing touch football in the backyard, but that's not the way it is. That's not the way it's being played right now. Commodities, for every buyer, there's a seller. For every seller, there has to be a buyer. This isn't like stocks where we all stand on the same sideline and cheer. I mean, we just issue more shares, maybe do a 2-for-1, things of that nature. This isn't the case. Commodities, zero-sum game, you against them. Buyers, sellers. That's why the Hunt brothers got smoked in silver. They went to sell, there were no buyers. Understand, supply-demand numbers might not mean everything in those scenarios. This is not like that. It isn't like stock market. That's why wheat, I say Chicago Board of Trade wheat contract's broken for the most part. I mean, you can say what you want. Any given time, we'll say 450,000 open interest. That equates to 2.25 billion bushels. Problem? We only produce about a fifth that, 450 million bushels. So in the past, when you had commercial interests that could offset the specs, that's no longer the case. It's not the case at all. It doesn't happen. It doesn't equate. That's why you get the extreme volatilities, as Andy was talking about, in the Chicago Board of Trade wheat contract. You have the world and the hedge funds, and the index funds and every other fund that's out there trying to make a play in ag in wheat. You've seen more as of late make the push over into KC wheat in Minneapolis, and I think that's going to become more prevalent. But it just gives you the background as to why I say the offenses or defenses have changed. They've evolved. They've become so much different now. We have to be aware of that. We have to look at that. Understand these terms. These are the new terms. Reallocations, rebalancing, redemptions. Huge, important terms. We'll start off, I tell everyone, it's simple. We'll say, let's see, who do we got down here? Where's Steve Musselman? Here. Steve, raise your hand. You're my hotshot new hedge fund guy from Harvard. I'll be an exec from one of the, I'll be an exec from one of the, the elite banking firms. I hire Steve. Steve comes in. I give him $6 million to manage. I say, Steve, I need this to be a balanced portfolio, a balanced hedge fund, because I'm going to sell this to the pensions. I'm going to sell this to the retirement of some of the biggest retirement, investment firms out there and things. I need a balanced hedge fund to do this. I know some of you have heard this spiel before. Steve jumps on board and he puts $1 million into each one of these and creates a balanced hedge fund. $1 million in grains, $1 million in currencies, energies, metals, livestock, right across the board. Steve catches it right in crude oil. Crude oil goes through the roof. He catches it down at $80. Crude explodes. All of a sudden, Steve's sitting on $50 million in crude oil. I go to Steve. Steve's fired up. He's happy as hell. He thinks this is great. I say, Steve, we got an issue. You know that balanced fund that I had sold to this pension group a while back? It's no longer a balanced fund, and they're kind of complaining because it's like an energy fund now. We got $50 million in energy, and we don't have that much in the rest of the sectors. So Steve says, oh, man, boss, sorry about that. What do you want me to do, liquidate those crude oil positions? And I said, well, hell no, we're not going to liquidate the crude oil positions. That's the big seller. Every investor wants to see that we caught that bull run. I mean, at the end of the day, and when the smoke settles and dust clears, I want to make sure that I tell them you did a great job and caught that energy run. So I'm not liquidating crude. I'm probably going to have Steve balance up the books, balance up the fund to be balanced by adding positions in the ancillary markets and the other markets. You have to understand that. So you have to look at the other markets and really, really understand how those markets are moving to how that plays in with some of the bigger funds and some of the more balanced funds. Reallocations, rebalancing, redemptions, what I was telling Mark the other day, I said, we have, I don't know, there's countless number of hedge funds that subscribe, and I'll call in the office and we'll talk, and I think there's a fear in a lot of them right now. You're seeing, I would say, I think they told me the stat, 15 to 20, they get paid in two ways. They usually, generally they'll take a 2% management fee, and the market rule is generally about 20% incentive fee. Understand, the incentive fee generally never kicks in until they go past the high water mark. Understand, high water marks were set probably 07, 08, in the heyday, boom. That set a high water mark. Since that time, they say, these guys are telling me 15 to 20% of the smaller funds have not collected an incentive fee in that long. That is a problem. The big funds now, the big players, Paulson and those guys, the bigger funds can operate on 2% management fee and tend to grind it out. The smaller funds, that's not really the case. Now you're seeing a type of, you're seeing funds start to close. You're seeing fund money start to trickle back in the form of redemptions. You're seeing hedge fund traders get more aggressive, a lot more aggressive, because they're looking at it like now they are trapped into a corner. Last year, the average hedge fund, I think we returned negative 5%. The S&P index returned plus 2%. Once again, they are falling deeper into a hole. To get past the high water mark and get their incentive, they got to hit some home runs. Understand, to hit home runs, they got to load up. So I'm telling you, the volatility is going to intensify, and you're going to see funds probably puke. If they don't hit it this year, you're going to see more funds closing down. That's all there is to it. I've talked to too many guys. There's going to be money pouring out. And I'll tell you the other equation. If this stock market takes off and rallies, you're going to see money move out. Watch the stock market. We're already up 8% in the S&P right now as we sit here. If this stock market takes off and runs, Andy and I worked together through the 90s. If you're earning 15, 20% in the stock market, and I'm the CEO, I'm probably taking some of that money from Steve Musselman that I gave him in this hedge fund, and I'm moving it over to the equity desk. There is not one firm in this country that can afford to miss the next big stock market rally. None. They got too many people that took it on the dive down, and no one wants to miss it. They are itchy on the trigger finger with these equities. That's why equities, that's why when I was telling you guys earlier in the year, back when, early in December, I said, be careful getting short this stock market. I said, if anything, play this thing to the long side, because politics are trumping this bad boy right now. And they had the hedge funds. Remember when I was talking about, they had these guys. The S&P was up, say, 2%. They go by, these hedge funds and all these fund managers are graded by the indexes, so to speak, that represents them. All of a sudden, the funds were down. They were negative 3%, negative 4%. The S&P's trading even to right in that area. They could not afford to miss that run, because all of a sudden they'd be judged against their index or their peers. They'd be negative. It would be positive. That mentality means a lot. That mentality trumps these supply-demand numbers. That mentality takes you to where you have to, you have by necessity to save your own ass and to save your job. You're going to be on the long side of this thing. So understand these I guess you would say these people's mindset as they approach and move forward. And I got to get everyone on this page in here if we have any hope of trying to predict general market direction. The short intermediate term ticks and trends, that's a fool's game if you ask me, if you're trying to pick tops and bottoms. We got to try and just predict general market direction and stick in those vicinities. That's where the money's to be made, and that's where it is. Excuse me here, reallocations, I think everyone knows it's just reallocating, like I said, from commodities over to stocks. If I said I was going to take, if we had $100 million invested over here in commodities and we wanted to catch more of the stock market run, we'd just take $50 million, move it over into the equity side. Understand that the indexes are generally all longs. What did I say? For every buyer, there has to be a seller. So if you have to liquidate and get out of long positions, you have to be a seller. Now all of a sudden, the market gets hit with a ton of sell pressure, corn prices go down. You know, we were close to 500,000, net 500,000 long when corn was trading up at close to $8. I gave the analogy of pushing the rock up the hill. Well, if everybody's ass is in pushing the rock up the hill, and we're all in, and you look around and you don't see anyone else left to push, and the hill's getting steeper and the rock's getting heavier, I'd say, holy shit, look out behind, because here we come. So when you feel that we're all in and everybody's in and everything's going our direction, and all the funds are in and the press is in and the talking heads are in and we're driving it hard up the hill, and you look back and there's no one else in line to get on board, heads up, because zero-sum game. Who else is going to get in? Who's going to be the buyer? I'm telling you now, there's a lot of dry powder sitting on the sidelines. There's a lot of hedge funds that have to make it this year. If you get a bullish story, they will jump this trade, I promise. Do not rule out, I would not rule out $8, $10 corn. You get a weather issue here in the U.S., I promise they jump this thing hard. So know who the position players are and know that they probably, supply demand, probably doesn't mean a hell of a lot to me if my job's on the line and my wife and kids and my house payment, I'm going to lose my house. I'll take the supply demand numbers. I'm probably going to roll the bones and go long and see if I can't dig out of this hole real quick. And if not, I'll probably be in a different profession. So that's probably the mentality of a ton of fund traders at this point in time. Know that moving forward. Outside markets, like I said, get the dollar right, you're going to probably get most things right. Get crude oil right, you're on board as well. Fund traders love crude. They love energies. They love this new ag story, this whole bullish, 2050 are going to be 9.5 million people. They love that story. That story really sells. Sells well to the general public, sells well to investors, sells well to pension funds. It sells well. Bullish story in ags, I'm telling you, sells. U.S. stock market, I said as well, be careful. Be careful cheering for this thing to explode. These guys will want to reduce risk if they can earn 15, 20% in the equity market. They'll taper out of this commodity game quickly. They'll start to move quickly, and you'll see it. Now, maybe after everyone makes a fortune in the next stock market rally, you'll see some money trickle back over and want to gamble a little and play in the higher stakes commodity side. But the best thing we could see is about a 6-7% gain in stock market and see this thing flatten out and maybe trickle downward the rest of the year, and I think you'll see some more interest in the commodity side. Other than that, I think we stand a little bit of an issue. You get a double-digit gain here in this stock market, you get 12-15% heavy. I'm telling you right now, if I'm running a big bank, I'm moving money. I'm not missing this train on the stock market. So we've got to pay attention to that thing. It is vitally important as we move forward. As we kind of get that mindset into our head, I want to see, Tim, where's that macro slide? I don't think he has it up there. But if we talk the U.S. dollar, let's just go back to that 1 second. And where I flip-flopped. I flip-flop there because I look at the safety, and the main guy in this thing is politics. And I'll tell you right now, the U.S. government is adamant that we have a cheaper dollar. And they're adamant about inflation going up. That's bullish. That is bullish commodities, period. You can argue, great, supply, demand, tell me whatever you want to tell me. I would not be bearish. And that's when I got bearish early, because the euro was falling apart, and the euro had me scared, and everyone was fluttering, as I put in the quote, you heard me right out there. I said, everyone's just flurrying over here to the U.S. dollar. And the U.S. dollar was racing higher. And I said, shit, I think the U.S. dollar is like a root cellar. I said, it's going to provide some protection while the storm blows over, but shit, it isn't anywhere I want to stay for very long. And that's how the funds, I think their mentality was. They wanted to race over to the dollar for a little bit, let the storm blow over, and then they got back out of the dollar, and dollars weakened back up. The U.S. government is adamant about getting this dollar down, keeping it down. There's one reason, jobs. The only way politicians can stay in office is jobs. They got to figure a solution to jobs. They only got two ways to do it, in my opinion. They're going to have to do it through agriculture, and they're going to have to do it through energy. They're going to have to create those jobs in those two ways. We're going to have to become exporters of natural resources. The only way to become exporters of natural resources, dollar's got to stay down. Dollar has to stay cheap. Bernanke knows that. That's why he's got to keep the dollar cheap. They run a dangerous tightrope right here, though. They got to try and keep interest rates low. So he's trying to keep interest rates low. He's trying to spike inflation. Everywhere I go, people ask me, Why is Bernanke trying to raise inflation? Does anyone know the answer? Anyone want to shoot at it? Well, you could say that. The deal is jobs. It all boils back down to jobs. Apple's sitting on, what is Apple sitting on now? 100, what did they say, 100 billion, Tim? Isn't that what it is? Apple's sitting on 100 billion. The biggest companies in the U.S. are sitting on massive, massive amounts of dollars. Let me explain this to you. Bernanke has to spike inflation because why? I sit here and look around the room. How many of you in this office, how many in here want to go out and buy houses? You want to buy a house right now? Anybody in here want to buy a house? Nope. You know why? Because you think the cost of a house today is going to be cheaper tomorrow. That is what Bernanke's fighting. That's what the federal government's fighting. That's why we can't expand jobs. As long as we sit here in this room and we believe that the price of goods tomorrow are going to be cheaper, or I should say the price of goods today are more expensive than they're going to be tomorrow, we will continue to have a problem with jobs. Bernanke wants to try and spike inflation. He wants Apple to think, I need to build a new warehouse today. I need to build and expand new channels today, as we speak, right now. Because why? It's going to be more expensive tomorrow. Well, obviously, Apple doesn't think that, or they wouldn't be sitting on $100 billion. Obviously, these other companies here in the U.S. don't think that, or they wouldn't be sitting on the money. So they know that. They realize that. When D.C. realizes, or the politicians, they understand that they are in a tight situation. They got to keep rates low to encourage expansion, but they also have to spike inflation to make us believe that tomorrow the cost of goods are going to be more expensive than they are today. That's a dangerous rope. That's a dangerous one to walk, and it could create, as some people will say, I'm not on this fence, but you stand the chance of stoking inflation too high, you could get into a hyperinflation type environment. I don't believe that's the case. I believe the biggest fear is deflation. I continue to believe that, and I'm not, if prices continue to erode and go lower, you're going to see people continue to contract, spend less, save more, and that's where the environment's going to take us. So that is what they're fighting. If the government wants higher inflation and the government wants lower dollars, bullish commodities. Understand that. That's the broad painting with an air gun in here, painting the ceilings. That's where we go. So that's when I immediately turn and look out of the huddle. That's who I look at first. If the government is not sitting straight down the pipe, I know something's off. We got to realign and we got to readjust. But right now, they're straight ahead. We're in man coverage and I'm good to go. It's me against them. I know they're on my side to some degree, so I will continue to keep a bullish tilt until I see that start to change. If that doesn't change, I don't think the funds are going to change their mind very easily. I think they're going to continue to keep a bullish tilt into the copper sectors, into the energy sectors, and those things. So you probably won't see me move off that bullish tilt until there is some rhetoric change or some type of political change in that front. In fact, I'll probably even move more bullish corn come Monday or Tuesday, somewhere in that time frame. I just think it's probably time. I'm seeing a few more things happen with exports. We've got, I'll show you how I equate it. Wheat, I'll obviously talk wheat. I think the biggest primary thing and the biggest objective is obviously food security, as everyone in front of me has pointed out. There is a glut of wheat. Wheat has a little bit of an issue here. Wheat is keeping a lid on corn, so to speak. If wheat could clear out, we would have a nice run. I'm not sure that's going to happen. I think that planted acres number is too high in wheat. Had a ton of producers, all kinds of producers I've talked to. They planted wheat, trust me. Insurance rate was 801, 810 in places. They all said, we're going to plant wheat if we have to drop it out of an airplane. Don't think we're going to harvest it, but we're going to plant it. So be careful getting too bearish on this wheat acre number. I agree, there's a shitload of wheat planted. No doubt about it. Will the wheat get harvested? You ask some guys in this room if they want to harvest it. You tell me how much is going to get harvested. I'm not too sure. We talked to guys the other day cutting it all down for silage. I mean, several places just chopping, boom, early, getting it off. Going to replant, going to plant something else. So I don't know. I'm curious as to that and how that plays out. And I'd be careful getting real bearish on that side of the fence because of that. And just because of the food security issues. We're seeing, all the countries, I think Egypt, or I should say Saudi and those guys in the Middle East, a lot of them are throwing in the towel, deciding water is more important as far as drinking or those things for consumption, building huge storage facilities, going to make huge storage for grains. I don't care what you say. I mean, if wheat leaves the port here, call it demand, call it, I don't care what you call it. It's leaving, it's going. So I got to believe that that's going to have to make some type of difference moving forward as we roll these things out into the new year. So I am in agreement. I am the least bullish of wheat. Understand that. And in the in the defense family with the Minneapolis wheat, we have heard that up in Canada, as this unwinds with the Canadian Wheat Board, there's going to be a huge push of wheat come down this way possibly. We could obviously roll south. So I think you do have to be careful. I think the weather is going to be pivotal here in the next 30, 60 days, and I think that's going to be one of the things we're going to watch. I thought it was odd to see the USDA say an average corn price is going to be $5 and wheat price is going to be $6.20, $6.30. I found that to be odd because I'm in similar belief with Andy. The only way that happens, in my opinion, if there's a severe weather issue, and if there's a severe weather issue, I think corn takes off and runs. I just don't see wheat, for some odd reason, being $1.20, $1.30 premium. So I'm not sure where they're getting their reasoning on that, and I think wheat will obviously continue to compete and battle with corn and take some exports away from corn. So we need to keep our eyes on that moving forward. Production concerns, U.S. and Canada, those are the type of things that I just look at as I come out. Like I say, those would be ancillary players as far as I'm reading the defense or the new schemes that come out each morning, and we'll adjust those numbers. So I just kind of take a look at those. Like I said, supply and demand used to be the key player. I'm not so sure it is. I'm not so sure. I think the bigger volume's not that in tune on it right now. It doesn't seem to be. We're trading more headlines. There's no question about it. I think headlines are moving the market. So understand, that's fine. No, there's guys that used to play strong safety, and then he changed, and now all of a sudden he moves over here and he's playing a different position. That is going to happen. That is going to happen. So don't just continue to think that it's just the same thing. We're just going to look at it a little different here. Soybeans, if I was looking at soybeans, I'd continue to look at those macros first, like I talked about. Then I'd move in. We're talking South American production. I think Andy hit it on the head. It threw us a real wild card. We were not very bullish soybeans going on, but we didn't get on the bearish side of the wagon, hardly any zero, so to speak. We did make some sales. Like I said, we had sales. We recommended, I think Hendershot will tell you, we were at 1350 new crop, 1350, 1325. Then we got some down at about 1175, somewhere in there. We're probably about 30%. No, we're trying to get to 50%. We're 40% sold right now at this time. Trying to get to 50 if we can get a bump up above 13. I don't know if that bump's going to happen. I'm not sure. I want to stay bullish. I'm with Andy. I would say it's probably the most bullish story on the books right now. I think we have the outside winds at our back, so to speak, and I think we can get a move up there. So I'm going to be patient with the soybeans. I think you might want to even be patient in through and after harvest. I'm just not sure there's going to be any, no idea they call it October, November, December tail in from South America. Last year we got a lot of pressure on that front. I think you're seeing a lot of companies now start to gear that maybe U.S. exports could make a little spike. If things play out and things play out in a good fashion, we might see a jump even post-harvest. So I may be a little less hesitant to sell beans as aggressively this year moving from here out. I feel we've locked in some good profits. I've talked to some guys. We're 40% sold at this time, trying, like I said, to get to 50 if I can get above that $13 range. Understand, too, how quickly you reduce your risk if you can get 40 to 50% pricing off the books at a profit. I mean, you can afford now. Hell, now, if we get 50% price and we're averaging around $13, shit, I can let beans go to $10. I mean, we can drop. I can go now. We got room to move. I don't really necessarily have to have hedges on. I don't really necessarily have to do a whole lot. But if I'm sitting there 0%, whew, and your break-even's 1160 or somewhere in there, that's dangerous. We could drop there in a hurry real fast, just depending on the way the funds get a weird feeling about them one day. So, and then what happens? You get all emotional. The market starts falling out. Every analyst starts panic, telling you all these supply-demand numbers. You're all of a sudden, it's like, holy shit, sky's falling. And then you make a sale, and boom, market turns around. Here we go back up. So have a plan before we get in that environment. Get yourself sold a little bit. Get comfortable with the risk more than anything. Get comfortable with what wager you have on the table. Remember, you guys are all in to start, so got to try and reduce risk as we move forward. You got all your chips already on the table every season when it starts. We go South American production, like I told Andy. Andy said it's obviously still the numbers are up in the air. You've got guys now saying, you know, what do we got? Brazil's going to be at 65. We're going to be, who knows, possibly in Argentina. New numbers come out every single day. It's like a fish story. The fish keep getting bigger, and I don't know. I mean, we're going to have to give it just a little bit of time here to play out. Some folks are saying the late rains have obviously helped some of the beans. You know, some guys will argue one side, some guys will argue the other. You know, I'm really indifferent on it right now. I think it's obviously stoking the bullish flames. If you have to equate it, as I come out of the huddle, bullish, boom, it's bullish. I mean, you're trying to determine if you're going to run or throw here, if we're going to punt. You know, I say, heck, we're in a good situation. We're driving the ball. I mean, that's where we're at right now. So Chinese demand, 55 to 60, who knows? 2 months ago, everyone's talking 53. Now we're at 55. Now guys are talking 58. Maybe we're at 60. Next year, we're at 64. I think this number's a guess. I think, you know, how can you believe the Chinese data? You know, it's, hell, every time we turn around, it's something new coming out of there. So I don't think anyone has a good idea on that. That's why I really discount some of the supply-demand numbers in and of themselves, because I don't think anyone knows what they have. I mean, let's get serious here. These guys are playing for keeps. You know, they're not just going to just turn over all their cards and turn over all their chips. I mean, they're playing this game just like we are, trying to play to win here. So with that in mind, be careful getting yourself, you know, overly divulged into these numbers and trying to fight this thing. I hear so many guys, USDA number's wrong, or the Chinese number's wrong. Well, okay, so it's wrong. So the scouting report was wrong. What the hell are we going to do? We going to quit? We're not going to finish this game? I mean, let's go. Drop it. We missed the boat there. Let's move forward on this thing. That's what we have to get our mindset as. You know, you got to try and predict and try and estimate to some degree, but don't get yourself all overly indulged with some of these numbers as we move forward. No Sam Tail, I kind of talked about that. U.S. acreage battle, I've talked about this one for the last several weeks, I mean months. There's everyone that was coming out saying we were going to be fewer soybean acres. How many of you did I talk to all across the country said, you guys going to plant fewer soybeans? Nope. I was telling A, I said, hey, nobody's planting fewer soybeans, not from what I'm hearing anyway. I said, guys were happy with their soybeans last year, had some decent luck, and seems like everybody's keeping their same rotation, not a lot changing. You know, I'm with these guys. I think we're going probably 76 million acres. The USDA said 75, staying the same. I'd say they'll raise them more than lower them to some degree. So we'll have to watch that as we head forward here. I especially think if you continue to see this balance, we've had some guys calling in as of late and telling me now they're thinking of switching some acres. Back over, corn on corn guys who weren't gonna. They were staying, they're like, hell with it, we're just gonna stay with corn on corn. Last 2 weeks, here we go. Might switch a few. Having a hard time maybe getting some seed, hell, just reduce the cost. I'm gonna have to throw these acres into soy here eventually, so we might as well just run a few acres here into soy. So I gotta believe soy acres continue to creep a little bit higher on us. I think we can get to that $13 mark. I think we got a chance to get up in that range. And especially if we catch any type of weather issue. Like I said, this money's gonna flow in and this money's gonna flow out. We get a little bit of a weather story, we're gonna come back in pretty hard, and I think we could make a run. So with the outside stars line. If we talk corn, I think this is one everyone wants to, you know, kind of hear about. U.S. South American production as I'm coming up to the line. Look, those numbers are throwing up on these balance sheets ahead of me. Those are if numbers. That is if weather is correct. That is if we get the acres planted. That is all big ifs, correct? We all know this. If that doesn't play out, we head higher. I say it's all about U.S. production. Make it real simple. I'll throw this out to you. We go 155 yield. I say we're at 1 billion carry. We're right where we need to be. Probably right in this area, you know? $6, $5.50, $6, $6.50, somewhere in that ballpark. You go 162, 164 plus, you saw the balance sheet, we're 1.6 billion or more, we're probably 1.78. Shit, we may be over that. We're going lower. We're probably going, you know, shit, I don't want to say sub $4, but don't the funds every time go to the extreme? I mean, don't they take this market way past where it should be? So don't say that we can't get by on, I mean, there's no way we can go sub 4. Don't say that. It's possible. They overdo it every time. They overdo it to the upside. They overdo it to the downside. So it's going to come down to yield, and I'm absolutely positive it's that pivotal, and that's all it's going to come down to. You go 150 or lower yield, or, something like this year, I say we go above $8 in corn. So pencil that one in. If I'm wrong, call me, tell me I was wrong. I just don't see it. I just think there's too much dry powder sitting. I think the funds could add a ton of money. I think the outside environments with politics is right. Nothing's going to change with the farm bill. They're going to try and create more jobs. They got to hammer the dollar. I don't see any way around that we don't smoke higher on a sub 150 yield. So get yourself sold to a point where you can handle the risk. Get yourself sold where you can weather the storm. If it goes sub, it could go extreme, but then we're probably going to get some bounce back. Know that moving forward. Future of ethanol, I think Tom did a great job touching on it. I see ethanol taking a more prevalent role across the world. I think you're seeing Bunge, I think you're seeing some other people invest millions and millions and millions of dollars into ethanol, period. I don't think they'd be investing millions of dollars into ethanol if they thought it was going in the tank. I think you're going to see more domestic bushels in South America stay home. I think because of that. I think South America wants to get the blend rate up. I know Kirchner wants to get the blend rate up. It's a 2% blend rate right now because that's all the sugar cane they can produce. She wants it to be at 20-25% like Brazil. Brazil politicians go on record as saying ethanol was the single thing that turned their whole country around. Period. End of story. They do not want to be handcuffed to Middle Eastern oil. None. Zero. So if you're going to tell me that ethanol is going to fall and fade away, I say there's no way. There's no way in hell, period. I don't see it happening. So I don't think these people, I have trust that these people are some of the smartest people in the world, and they're investing millions and millions and millions of dollars to find alternative fuel. And one of the biggest ones, obviously, ethanol. And they're going to do everything in their power to produce more ethanol. So as production goes higher and the supply and demand numbers move, and this can't happen, and I hear that this can't happen, remember what I said, smartest people. 2-year period, overestimate everything. In a 10-year period, we have no sense of what can or cannot happen. I will sit here today and bet in 10 years ethanol is way, way bigger across the world for the video that Tom showed. So, global demand, obviously. I think that's going to play out. I think we got to look at China. I think, like Andy said, he hit it on the head. I think China's gone from, we had a conversation the other day. I think China, traditionally they came in and were just big buyers all in one chunks, trying to restore, obviously, their own domestic, supply lines, supply chains for the government. I think you're seeing that change now. I think it's taken more of the tone of the soybean importing that China's doing. I think China is going to start smaller increments. Like he said, it could be a day-to-day thing. We wake up, China buying corn again, China buying corn again. I think that's probably the theme moving forward, especially. I think China thought there for a while. They were wanting to import corn because they were having more trouble. They were paying more to move it domestically in the country and to transport it than they were to just import it. So I think you're going to see that theme continue. I think they're going to try and import, I think the number's being thrown anywhere, 4 to 7 million tons. I think we're going to continue to jump. I think FC Stone threw out a crazy number a couple of days ago that said we could jump dramatically in the next 2 to 3 years. So I'm telling you, I think there's more to this China story. I think, where there's smoke, there's fire. So I'm with Andy in the sense that, I don't know, we're making all-time highs in China and corn, and then they're telling us they have a record crop and demand's going in the tank. Shit, something doesn't make sense. I mean, I'm not that stupid. I know I'm not the sharpest tool in the shed sometimes, but I cannot figure that one out. Like I said, people buy value. There's obviously value in corn for some reason, whether it's for ethanol purposes, whether it's for domestic feed purposes, the hogs, the cattle, whatever it may be, prices are going higher in China. And that's what's happening. So will I probably move more bullish come next week? Yes. China has now, that is a trigger. China has now stepped in and confirmed they are buying in small doses. To me, small doses is more bullish than just one big chunk. I just think there's an issue. So I probably become more bullish in that context. Mexico obviously having problems this year. Japan, we know their issues and how that's playing out. So we're going to continue to look that front. And as long as, like I said, as long as the outside winds stay behind our back, as long as these things happen, you got production failures in South America. I think ethanol's going. I mean, let this Middle East thing blow up, like Tom said. Let people lose their families. Let things play out and let human emotions get involved. Supply demand goes out the window. Let this play out deeper and see how this Middle East thing plays. Let me know what happens with this ethanol. And I think you're going to see the same thing with global demand. I think it's going higher. So what? We've gone straight up. What's that mean? Well, now it has to be a bubble? Oh, it can't go any higher? I don't believe it. I don't believe it. I've seen too much. I've seen too many things happen. I can't be on that front. So you have to listen to the markets. Don't try and guess these tops. Don't try and guess these bottoms. I mean, it's just a fool's game. Like I said, it's just very, very difficult. So forecasting, handicapping, I say counting cards. U.S. politics, it's just on a scale of 5. I give U.S. politics +4 right now. Oh, not in the job they're doing. Hell no. I mean, we're not going there. I'm saying the policy they have as far as what could happen to these commodity markets. They're playing safety right now. I'm reading them every step of the way. They're definitely stoking the flames. They need inflation to go higher. South American production setbacks. So you telling me that's bearish? No way it's bearish. Shit, I should probably be at a 5. No one saw that coming. I mean, I'll give it a 3 just because I don't know yet. I've just heard too many stories both sides of the fence. La Nina weather patterns, crazy winter. Warmest winter we've ever seen here probably. Craziest winter. I think Jay and I talk, other guys talk. I've been all up north, all everywhere. Everybody says, hell, we haven't even had a winter. Well, that's normal. I mean, is that bearish? I don't think it's bearish. I'm going to say it's bullish. As I break the huddle and look, I'm saying weather's bullish. Shit, if the trend continues, if the trend's my friend, we're in for some type of erratic summer, I've got to believe. I think they said it's like 99%, 95% of the time, extremely warm winter produces an extremely warm summer or extreme heat. -4, potential to plant second most corn ever. Got to call it like I see it. I mean, there's no doubt about it. We're at 94 million acres. I'm with Andy. Probably should be at 95 million. I wouldn't doubt it. Next thing, triple stack, genetics. Well, genetics are off the charts at some of these places. I don't think we've even touched the tip. So I got to be -4. I should probably be -5 there. I mean, realistically. I mean, I'm not sure. That number there has kind of got me a little perplexed because there's still the if on the weather and, if we can get those things going. Glut of global wheat supplies, -3, period. I mean, shit, all-time highs in world wheat right now. I think demand's hanging in there, though. Demand seems pretty tough to me right now. Demand's playing a heck of a game, in my opinion. And I think that's the only reason I kept it off of -5, say, if I'm getting up there and I'm just quickly analyzing. Chinese importing potential, I did this slide before they announced that on Thursday. +1, I think you got to probably go to +2, +3 now. It's a strong player now. It's just if I'm breaking down a scouting film in sports or in football, I mean, I'm looking at every player and I'm analyzing strengths, weaknesses, strengths, weaknesses, strengths, weaknesses. I mean, that's a strong play. I think you got to give that probably more than a +1. Potential for funds to add more length. I don't know, what are we long? 200,000 corn right now? Andy funds, somewhere in there they say. Funds are long 200,000 maybe. 220. He's got all the numbers down to a science on it. 220, they could add more. Obviously, we've seen them close to 500, around 500 on the heydays. So I think there's room to add more. So I'd say dry powder sitting on the sideline +2. Nothing extreme. -2, potential stock market surge, forcing reallocations from funds. That's minus. I think stock market's going higher. Stock market goes higher, we're going to lose some fund money. So probably a minus in my book. Some guys might say it's bullish. I don't. I think it's probably negative. So that weighs against me. +1 on crude oil. This one's kind of tricky. You could argue both sides of the fence. I think end of the day, though, crude shoots to $200 or $150. I think you see rebalancing of the funds. I think they got to buy across the board. I think you see ethanol take a more prominent role. I think you see that play out to be more bullish. Initial knee jerk may be less demand. Obviously, a lot of guys have said, why are we heading lower with crude going higher and corn's going lower? Less demand. Less demand at the pump. People are going to hunker down, carpool, going to be less gas burned, obviously. So you get those prices sky high. It's going to stagnate and stall the economy. Ethanol guys are going to overflow, and that's going to could be negative initially. So that's why I didn't give it a very, very bullish scenario there. Global debt, -3. I'm not sure about this global debt thing. Like I said, I think we're trading on a new dynamic. You can continue to say that we're trading, who the hell doesn't know that global debt's off the charts? So what? I mean, I don't think anyone's trading on that dynamic. They're not on that plane anymore. Everyone's like, okay, we've assessed that, we know that, we're going to trade up here now. We're going to trade, and that's really probably just going to be an afterthought. And if it does unspiral, now it will create some ripples. That's why I said I think you got to give it a -3. I think you got to play it in a, it's on a weak side type of look, and I think it's fighting against us. So you add all of them up. I come to a +1 as I do it, and I average it all out in my head and run the numbers, and I'll be at like a +1 on that equation. So that gives you guys an inside look. I mean, identify as you break the huddle in the mornings, or if you break the huddle every week, identify the players in the game. What is moving these markets? Is it the headlines? Is it this? Is it supply demand? Supply demand could all of a sudden move back and become safety. I'm not saying it can't. But right now, I don't see that being the case. I think it's moved positions. So I've, weakened the tone of that to a degree. So that's how I'll come up with bearish or bullish. Like I said, I thought safety moved to a degree when Europe started to really unravel and all the fund money started pushing into the dollar. We kind of thought that was going to be the play. The dollar started jumping higher. That's why we were on the bearish side of the fence. Once that storm blew over and everyone bailed out of the root cellar, hell, we were back to the bullish side. So understand the game and understand the politics and understand the players. I had a lot of questions as of late when I went out about livestock. I am certainly not a livestock expert by any means. I get a lot of great information from the guys on the round table and on my board of directors and things of that nature. My obvious thought on livestock, I'm bullish. I'm bullish livestock, period. I read a thing that said I could throw out the numbers on the cattle herd, but who cares? I thought this was better. It said the U.S. cattle herd to date, right now, is at the same place it was when McDonald's had 75 locations. That's it. When McDonald's had 75 locations, we had the same cattle herd we have right now. So that's pretty crazy. I mean, the cattle herd is down, to say the least. Pasture land, we were up in the Dakotas and everywhere. Pasture land's being torn up right and left. I think a lot of crops are going in to a degree. But I am definitely, I'm bullish cattle, and that's why I said I kicked myself in the ass when I went and shorted the cattle market. I mean, it's just one of them dumb moves. Broke the huddle, read it right, threw a pick, walked to the sideline, just shaking my head, a little lighter in the wallet, I should say. So I try not to go against myself, but I just get like, oh man, I really think this is the top. What the hell do I know? How are you going to pick a top? You look at a chart, it's like straight up, and I'm like, oh yeah, I'm going to pick it right. I'm that good. I'm going to pick that top right there. So it's silly, and that's what I want to teach you guys and try and help you understand is that don't go against yourself. Trust your instincts, trust your reads, trust your calculations, and trust what you've come up with, and take it from there. I think there's obviously a lot of fresh water is going to be an issue. I think that's going to cause the herd to have some issues and problems. And I think we do have strong global demand. Understand this, if that thing in Europe unwinds, if we unwind in Europe, global debt becomes an issue, it rolls over, China goes in the tank, we get into some type of recession. My opinion, the first one they cut back on is cattle. Obviously, because the thought is that higher protein diet is going to start at the top of the food chain and just dink down. So cattle is going to be liquidated first, probably because you're going to see less beef being bought, or import demand will go down, so to speak. So understand the cattle guys in the room. Obviously, you're having your day in the sun today. Make plans. Make sure you understand that it could crack in a hurry if they get skittish on some type of recession into the Asian area or some type of recession in those fronts. I am extremely bullish, though, the bigger the herd gets in Asia as far as hogs, or the bigger the herd gets in those countries, with disease becoming a bigger factor because it spreads like wildfire over in those areas and creates a massive run into the market. Once again, a good story, funds love it, and all of a sudden we're off to the races. So there are some equilibriums there that we need to watch as we move forward in the livestock. Next one, I won't even put the slide up yet. How many of you think farmland prices are in a bubble? Anyone? Raise your hand now, come on. Oh, come on, you liars. You call in all the time asking me, oh, you think prices are too high? This stuff's gonna bust. I mean, I hear it all the time when we go out. I don't think so. I'm crazy maybe, I don't know. I don't think so. And the reason I say that is because of this. I think everything has value. I just came up with this when I came back from Arizona. I was listening to some people, and I just kind of started thinking, I'm like, because I thought land price is kind of similar to home price. I'm like, here we go, land prices are racing up farmland, and we're going to crack, boom. I don't see it. The reason home prices cracked, I mean, everyone knows, hell, we just rolled the dot-com bubble into the housing bubble, and the housing prices for years tracked with wages, right? When we got into the bubble is when we decided to divert from the wages. Wages started to go here, we lost unemployment, all of a sudden home prices went up, bubble. I don't see it with farmland, and here's why I say that. If I go back to this thing that price doesn't mean shit, it's value, follow me on this. 1980, average yield 91 bushels an acre. Price 310. Just multiply them times each other. I just come up with my own index. I just said, hell, this is whatever. We call it land production. I don't know, maybe there is an index. I have no idea what it was. 282.1. 1990, average yield 118. Price corn 245. Creep a little higher. See if I can get this down right. Right here, 2000. 137 yield. 249. Here's price of land. 2005, 145 yield. 236. Here's your jump. 153 yield. 540. The price of farmland, in my head, the equation is the number of bushels times the price. That's your value. That's the value of the ground. If you go out and continue to equate, 09, we go 162 by 390, we drop to an index of 615. Here we go, 165 yield, 450. We're at 742. Here we go, 2011, 147 yield, 650. 2012, let's say we go 162 yield. $6 corn, you're still going higher, 972. Let's say you go $5 corn. You didn't drop much. You didn't drop much. You're at 810. Go out to 2030. I told you the seed companies want to be at 300 yield. They don't think it's out of the realm at all. You go 300 yield, and you go $6. I don't think land prices are coming down. You're at 1,800. You're exploding. You're doubling. Understand, production is key here. 300 yield. Let's say you go 300 yield at $4 corn. Holy shit, we're at $4 corn. The index I come up with, you're at 1,200. That's not down. That's not lower. Okay, so what? Corn's going to go to 250, 350? You're still not getting banged up too bad. You're still in this area right here. So understand, there has to be a divergence take place. I mean, yield would have to stay down here. Yeah, what's yield going to stay at 162, and then you're going to project out? Well, possibly then, yes. I don't say that happens. That's why I just don't see that. I'll tell you another thing about land, in my opinion. This is just my own personal opinion. I think you should be buying all the dry land you can buy. I think genetics are all the world, and all the money is pouring into dry land. Emily pointed it out. You got China trying to feed 20% of the world's population on 5% of available water. Bill Gates is throwing all his money into finding traits in genetics for people without water. I don't know, what looks like a bargain to me is to buy dry land, buy ground, more dry land out towards Kansas area. It looks to be cheaper to me if genetics gets it right. If the traits in genetics get it right, it looks to be more value to me out into the drier land areas. I mean, that's just in my opinion. You Kansas guys can tip me after all this is over. Get that, get my, I'm kidding you on that in a sense that I think genetics is going to play a big part in this, and the world seems to be focused on genetics for drier conditions. In those drier conditions, there may be an advantage to, you know, I'll just tell you right now, and then maybe this guy's nuts, maybe, and I had a guy from Nebraska too, said they were selling their ground in Nebraska and going to buy ground out in Kansas, in western Kansas, the cheaper, drier land. Some farmers said, like, what the hell, is the guy nuts? I don't know. Maybe he's nuts, maybe he isn't nuts. Maybe he's onto something. I'm not sure. But it's intriguing to play out and think about, maybe that dry land ground will produce big numbers at one point. I'm not saying they're going to produce Iowa, Illinois numbers or things of that nature, but maybe value-wise, remember value, number of bushels times price is what your value is on your land. So understand that moving forward. Don't be so quick to think all of a sudden we're in a bubble and this thing's going to bust. I'm not sure how that plays out moving forward. Next thing, I believe is your marketing plan needs more flexibility. I'll go into this real briefly and quickly with you guys. When I first started trading in Chicago, I'd come back home. There'd be guys that playing dominoes and things, some of the farmers locally, and they asked me a bunch of questions about the markets, what was going on, this and that. I just flat out finally told them they didn't need to be trading anymore. I mean, they'd get frustrated. They'd get with marketing advisors that I would say led them down a path that they didn't need to be down. Most of them lost. Let's just be realistic. Most of the marketing advisors come up, in my opinion, with a cookie cutter plan or a program for their best farmer. They build that plan for that farmer and then try and sell it to you. And unfortunately, we're not all the same. Some of us has wives that may be sick. Some of us has daughters that are getting married, kids in college. We need different cash sales. I think Andy alluded to the fact every operation is different. Every farming operation is different. So if you get involved with a cookie cutter type program, I'd probably say get uninvolved. I've just heard too many guys call me and ask me, well, my marketing advisor got me into this position, and then when all shit hit the fan, he called me and said, well, Bob, what do you want to do with this thing? Well, hell, he got you down that road. He took you into the woods. I would hope he's got a path or an exit strategy to get out of the woods. So if you're getting those calls, I don't know. I mean, you might want to rethink some things because that's not where you need to be in these extreme waters. You do not need that type of help. So I used to tell guys I'd focus more on cash sales, and I probably wouldn't do that much in the futures or options business. And you know, I think it pissed off some people there for a couple of years or 2 or 3 years. And oh well, so be it. Like I said, I wasn't really looking to make friends here. I was trying to, you know, to do the best for the producers and you guys and give you the best information that I seen at the time. I think, in my opinion, that's changed in the last 3 or 4 years. You have to, you know, I hate to say it, but you have to figure out how to get more flexibility in your marketing plans. You have to do this. Like I said, it's a zero-sum game. You're playing touch football in the backyard, you guys that aren't using it. And they're unfortunately your competition and the guys coming over the hill on the horizon. You know, fragmentation, high gross players understand this. And they're marketing at a much better and much more efficient level. Some of our producers and the guys that are on my board of directors we talk about, he said, Kevin, I can't afford for my neighbors and the guys over here to get way ahead of me on this marketing now that we're moving $2, $3 extremes. He's like, all of a sudden they're sitting on tons of cash, and then they're going around to all my guys that I'm leasing with, and they're bidding up all the ground on me, and I'm in deep, deep trouble. That didn't used to be the case when we only moved from $3 to $3.50, back to $2.50 to $4. You know, that wasn't the case. Now that is a huge problem. Your neighbor hits a big home run, and you're over there on the sideline. That's probably going to be a little painful if he does it a couple of years in a row. Total range of 250 on 250,000 bushels. I don't think I'm telling anybody anything they don't know. You guys do the math at home all the time. $500,000. Could make or break some people. Like I said, the guys in Louisville, when I spoke out in Louisville at the keynote, had 2 moms. Some of the guys will tell you, 2 women came up crying. They said, you know, we really appreciate everything you've done. It's unbelievable. And you've helped us so much stay on top of all this. They're just, can you help our kids? They go to college, and they said, my husband can help. They know how to farm. They absolutely know how to farm. We can teach them how to farm. They're like, we're scared to death of turning over this to our sons or daughters with these markets the way they are. One bad move, and it's over. You guys have heard me tell you about, you know, terrific producer in Illinois, president of the big bank. They had 17 locations, whatever. Him and his dad had been farming for years. 10,000 acre operation. When that market went down 2 years ago, when it broke, you know, off that January report, headed down below, it got down to 4, and then it made its way back to 450. And every analyst out there was saying, holy shit, you got to get sold because this thing's going to 3 something, going below $4. I told you guys this, and there's been countless people telling me they sold 100% of 10, they sold 70, or I think it was 100% 11, and 60% of 12 at 450. And then guess what happened? I get a phone call. I remember the day I'm watching Jordan play football. I get a phone call from a guy who says, holy shit. He's like, we got big, big problems. I'm like, what? He's like, you know, I told you we got all that sold. And he was telling me how great this analyst was he was following. Got all this sold, pre-sold out in all these years. He says, I'm making 130 bushels. I said, well, you know, he's in Illinois. I mean, he's banging home 200s plus. I said, just calm down. Wait till you get in the good field. He says, I am in the good field, damn it. He said, this is the good field. I went here first to make sure. I said, oh boy, we got issues. And I'm telling you, they've been digging out of this hole and digging out and digging out. So be careful in these environments. Do not follow people that are going to get you extremely oversold. You can't predict that out. I don't care what they tell you. Supply, demand, balance sheets, this, that, and the other. Be cautious. Play the game. Don't preconceive ideas. Break the huddle. Look at every play. Look at every situation and make the right play, the right read on that situation. I'd be cautious getting way far out on the oversold train. Same type of deal in beans. Not telling you anything you don't know. Here you go. Some of these guys at Daniels have put this out on a video. Carl and some of the guys at Buckeye, we talked about it one time, and I thought it was pretty interesting until I threw some of the stuff in here. They're not the markets of old anymore. Not telling you anything you don't know. Hell, we go to lunch, come back, we might have been 20 higher. Next thing I come back, we're 20 lower. I mean, the ranges are insane. They're ridiculous. So know that as we move forward. That's why you need the flexibility in the marketing plans. I think they point out a good point. 30 days, we went from $8 to $6. 30 days. That's a $2 move. On 50,000 bushels, that's 100 grand. I mean, I'm not telling you guys. You guys live this every day. I mean, you guys live this volatility, so I know I'm not pointing anything out that you don't know. It's just when you see it on paper, it's just a little more, hits home a little bit more. Here you go, boom, boom. Same type of deal. 30-day moves, you're getting $1.90, $1.70 moves. Now, look, I mean, that's the way this thing's playing out. It's not just like it's just a one-time thing. I mean, this is how we're moving forward. Where are we going from here? They make a good statement. They said in their thing, are you willing to bet your livelihood on it? Unfortunately, that's what we're left to look at every single day. Every day. That's why I try and put everything I have into this, because I know you guys have a lot on the line. So I tell Michelle and I tell the kids, and it's one of the things around the house, I said, I don't give a shit what you do in life. When you leave this house, you're going to be good at something. You're going to know how to be good. I'll give Jordan a hard time with sports. I said, shit, collect stamps then. I don't care if you're going to cry about it, you're going to quit. I said, be the best stamp collector then, if that's what you want, if this is too hard for you. But you're going to learn how to work hard, and at the end of the day, when the whistle blows and it's all over, did you put every bit of effort into it to be the best? So before I hit send every morning, I double check. Michelle's like, my gosh, you're eating up with trying. I just want to make sure I give you everything that's out there for you to make your best decision. And I know, because your guys' livelihood depends on it, I'm not saying I'm going to be right. By no means. I mean, trust me. Let's say I sat on Andy's board of directors. I've given him plenty of bad advice. We talk about it all the time. We'll tell you about it later. I about quit one time because he was going to, I'll just tell you right now. We had hired a couple of traders. One of their dads was a big shot at one of the exchanges. I liked the boys. They were good kids. They were a little ornery. Andy says, fire them some bitches. Fire them, fire them, fire them. I said, that's it. Shit, I'm done, man. I'm packing my shit in. I did, didn't I? I said, if you're going to do this to these boys, I'm quitting. I'm done with this. He's like, you got to be shitting me. He's like, all right, fine. I'll keep him. 2 weeks later, I think it cost him $500,000. He's like, boy, that was a swell move, man. Can you give me some more tips like that? He's like, you got to be shitting me. And he's got to bring it every time we meet new people. He's like, yeah, this guy here, boy, he's at it, boy. He gets pissed and bulled up, and he's going to quit and kick your ass. And he's like, be careful. It costs you a lot of money sometimes. So that just let you know, so we've had some of those. But I like I said, I'll try and give you my best shot on it and where we're headed. So I know it's critically important, especially with the waters this high. They point out seller's remorse. I love this term. Seller's remorse. This is what we all have. I mean, here we are. $6. Do I make the sale? Do I not? I got to hear Isaac Christie tell me, and Musselman, and all the guys that call in, and Robin, you're just, oh man, I don't want to sell. Because you know why? As soon as I tell you to sell, bingo, there we go, and I'm getting oh, nice move, Kevin. That was really smart. Shit, I could have got a lot more. I know the routine. I hear it every day. So you've got to come up with some plans and some strategies. If you pull the trigger there, guys, re-own the board. Mark Gold, he's one of the partners with Andy. He does a great job of some re-ownership strategies as far as bull call spreads, things of that nature. There are different things you can do. When the market took off, like Andy said in Decatur, and we went to plus 40 on the basis, why in the hell was I calling guys and they would not sell the corn? I'd say to them, guys, we got to make a sale. Let's make some sales. We're playing the basis at that point. The basis jumps 40 cents. Move it. Re-own the board. Hell, you could buy $8 calls for a dime if you want a lottery ticket. July's. Then you got 10 cents of total risk, not the entire risk sitting in the bin. The basis could fall 10 cents in the blink of an eye, like Tom said. He flips the switch at the ethanol plant. The basis, the front end basis goes right in the shitter. Now you lost 70 cents. That makes no sense. And I guarantee you, here was several of my calls. I'd be like, man, we got to make some sales. Sell some of this. Well, I will. And I knew there was apprehension there. I said, how's it going out there? Oh, awesome, man. Just got a few new bins built. Got some others built. That's good. How the kids? How's everybody? Sports good? Yeah. 2 weeks, call back. Did you get them sales made? Oh, shit. No, I didn't make them. What happened? God dang it, Kevin. He's like, I built that new storage out there. I got to put that in that storage. I have toys too. I realize that. And I know your wife will be pissed if you build that new storage and you don't put some grain in it. That's probably a stupid move on your part. The storage is for when prices are low and the basis is shitty. So if the prices are good and the basis is strong, we've got to move bushels out of storage. I know you've built it and you want to use it, but let's make sure we're on the same page. You have to move it when the basis improves dramatically. And we can come up with ways. Guys, call the office, call some people, have some relationships. That's why I said build relationships with people in this industry immediately to help you work around these issues. Build one with people you can trust. You can always call in the office. I got guys that call in who've been with, I can point out some guys over here that have been with their same broker or trader for years. That's fine. I don't have an issue with that. Call me and I'll let you know if they're bullshitting or lying to you. I'll at least give you my best opinion anyway. But come up with some ideas or strategies that can help you not have seller's remorse. I think there's guys here that can help all of you with that. Holding too long. Here's the favorite. Trading 780. I get bearish. Oh, I had to listen to Dallenberg bust my ass. Oh, what's the big Arctic bear doing today? What's he saying? I had other guys calling in. Yeah, I hear you guys. So you guys are getting all bulled up right there at that time, and that's fine. I didn't have an issue. Here we go. Next thing around the horn, bingo. There we go. I called 5, 10 guys at right between 750 and 780 to make sales. You want to know how many made the sales? Zippity-doo-dah. Paying me for that information, by the way. Not sure I understood that one, but here was the lines. I'll give you the variety of lines. Oh, shit, Kevin, missed it. I said, what do you mean you missed it? Damn it, I was looking at some stuff and reading some charts and looking at some diagrams and angles and flux capacitors and this and this. I don't know what the hell he's even saying. I put an order in at 802. I was going to, I thought I could, I know exactly where 802 was my order. Why 802? Well, shit, everybody would probably be at 801. I go to 802. Okay. Then I had some other guys. We're going to go 799. Why? All the stops are at $8. We're going 799. We know they probably won't get there. Maybe it will. I'd hear some theories, and I'm like, oh, my goodness. Guys, when you're getting in these extremes, we are not that good. I am no way that good. You will not hear me try and give you specific price orders. I'm no way. I am not anywhere close to that good. So if you think I am, yeah, I'm not. And if you're following people that you think are, they're not. So be careful. Know your plan. Have a plan. When you reach those numbers and those numbers equate and they work and it's a business, pull the trigger. Pull the trigger. Seller's remorse, holding too long, I think like I showed you, that's the case. Obviously, you guys, there's tons of things you can do to prevent those things. There's a lot of different put strategies and things that we can talk about or discuss, things moving forward in those arenas. 3 keys to success. Don't get yourself oversold, I think is the biggie. Have that in your head as we move forward. I think we continue to drill on that. Sell your cash bushels when the basis is strong and re-own the board. I see no issue in that. I think that's a smart play, and I think that's something you have to do. Make money when the grain's being stored and prices are trending lower. Like I said, sell covered calls. No different in the stock market. You own a stock, sell covered calls up above. You guys own the grain. The grain is sitting in the bin. If you want to sell corn, July corn, at $7.50, go out and sell $7.50 call if you want. Yes, it's going to take some margin, but if you can sell a $7.50 call for 30 or 40 cents, why not get on the right side of the trade? That's a $7.90 HTA type sale on the board. That's all it is. Futures First, call it whatever you want to call it. I know there's different lingo around the country. Futures First, HTA type sell, same type of deal. But rather than being a buyer, because you guys all complain that a lot of the options expire worthless, you can be a seller at those levels as well. If the corn never trades there, you collect the 40 cents, put it in your pocket, sell some more. Sell some more on further out, you know, and if you want to continue to use your storage in that capacity. I see nothing at all wrong with that, and that's something everyone should entertain those thoughts and ideas. Steps to improving your results. Kind of what I say is you got to have the right information. You got to have the right scouting. You know, you got to have a good scouting report. You got to know what the players are and who's in the game and who's not and where they're located. I hope I try and give that to you every day from the information I get from the guys here in this room and all the resources that I have. I hope I give you the best scouting report of the day and that it tries to get it all tied up there for you in one shot. From there, I think you need to build a detailed marketing plan. This is the problem. As you guys know, last year I worked with guys one-on-one. I wanted to try this out. Had a small group of guys. We all worked together. I thought it was good. I could have done a lot better in the fact that this part right here, I didn't have a detailed marketing plan as far as living, breathing, having the numbers. A couple guys brought in their, let's see, the break-evens on Hardee's napkins. I think there were some on some Wendy's napkins. Some other guys brought in some on Excel spreadsheets and shit, I think I needed a PhD to decipher what all was taking place on there. So I had a problem in some degree of getting all the, I guess, the balls in alignment. There's no continuity in this industry, as you guys well know. It's so fragmented that you don't have that central accounting type practice that can tell us those things and break it down. Ken Dallenberg and some of the other bigger producers in there pointed out a program to me that it's called GrainBridge. I'll get to that slide here in just a second, but Ken loves it and some of the other guys do. Problem is they wouldn't let farmers buy it directly. So Ken called and says, well, guess what, buddy? You're going to have to spring for it. Oh, great. So I ponied up and bought and went in with GrainBridge and, paid for all the research and technology and everything to be allowed for our guys here to use it. I think if Ken, when Ken wants to come up and just mention a couple things in this roundtable about how well he loves it, because like I said, it pipes everything in quote-wise and does a great job on real-time data and lets us pull the trigger quickly so we don't have to go back through all those numbers and all those crazy things. What we did then, I think you need a coach. I think you need some unbiased feedback, someone without a dog in the race. This is very hard to find, in my opinion. Most of the time you end up with feedback from people who have some vested interest in either where you sell your bushels from the elevators, where you're going to market or move them to, or trading or banking or something along those lines. They have some vested interest somewhere in your pocket, so to speak. I hope that here at Farm Direction, I've tried to bring together people that can give you the information that you need to make the best decision, and they don't have a dog in the race. They really don't have any reason to steer you one way or another, like the guys we've had speak here today. So I love that fact, and I think that's obviously what we've done. So for this year, what I did, and I think you've heard some of the guys already call around about it, we've seen that guys love the report, but shit, they couldn't bridge the gap. So a lot of people take it, love it, and they're like, well, I ain't making any more money before. I just can't execute. They could not execute. They can't hold themselves accountable. We say to maybe make a sale of this percent. They just don't do it. They just don't have the marketing plan all wrapped up. So this year I said, well, I'm going to let my guys in the office, we have four guys, and I was going to let them work with folks one-on-one, obviously. I was going to let them work with 40 people, and that's it, and I'm cutting it off because I don't think they can handle any more than 40 people each. And that's really, that's a good round number. Like Hendershot has some things set up where he tracks everyone's basis for them on places that they're going to market or sell, whether it's the ethanol plant or the feedlot or those things. We have all that in a program for everyone, living, breathing marketing plan. And I like to tell everyone, the best business is outsourced. Don't be too proud to outsource. I mean, do the things you're good at. Like Andy said, you guys are good at producing. You like to produce. You spend 95% of your time producing. Outsource. I mean, it's the best business in the world, outsource. Don't be too proud that you can't. I'd say, my wife likes to say, I want to be organized, but shit, I'm not. I mean, every year she goes downstairs and cleans out the desk or something. I probably have 4 Franklin planners in that damn thing with all the bells and whistles and everything in it. She'll be like, babe, we've got about 15 Franklin planners now from the last 2 years, and you got like 1 appointment in it. I said, well, I had good intentions, but I had great intentions. She's like, unbelievable. But if I have someone at the office that can keep me organized and do those types of things for me, I have a lot better chance of staying on top of it. So that's what I've tried to present here, and this is what I want to present to you guys is, if you get on board and you want to do this darn thing with GrainBridge and get us tied into that degree, if you buy nitrogen, just hit the button. Funk, Cameron, Musselman, you guys, hit the button on your phone, call in, say, hey, I just bought the nitrogen, here it is. Because I know you guys are not going to you're not going to pencil it all in, and then we'll do it. We'll put it in the program, we'll put it in the system. Then if you're at home at night or the weekend and you want to check and see where everything is, you get your own unique username and password. You just click your thing, and it's all your info's in there and all your data. You can use it, manipulate it, change it, however you want to do it. It's on the big secured thing, and that's where it is. But it will keep track, and it will do all those things for you. There's the, there's kind of the screen. I think you've seen it in the handout that we passed out. Like I said, we're doing it for, it's less than $100 a month. I think we're doing it, we're at $5,000 for the year. So it's about, like I said, under $100 a week. And that, we put all that in, we put all the information in, give you the plan, the program. You guys can check it all out from there. And the guys will be around here if you have any questions or you want to talk to them on any of those types of things. So, like I said, we've got the information available for the do-it-yourselfers. If some of the guys in the audience want to use the GrainBridge thing, you're more than welcome to. And then we got the guys that are needing some help and a little bit of assistance and need to outsource some of those things just because manpower-wise or man-hour-wise, you just don't have what it takes to go down that path. So that's really all I've got for us for today. Like I said, we're going to jump down and do the Q&A here real quick. I hope I've given you guys some insight as to how to look at these markets, analyze them as quickly and as efficiently as you can. Damn report gets awful long, I know, but like Andy said, I mean, spend a little bit more time so you're knowledgeable. Invest in your knowledge and try and just, come up with the ideas and reduce your risk. I can't stress enough, reduce the risk. Understand, you walk up to the table and your chips are all on there. It isn't like you're putting chips out. You know, we go to the casino, I got the chips in my pocket and I just start adding them. You guys go and all your chips are on the board. Start taking chips off. That's really the name of the game here. So that's what I have. I appreciate everyone coming. We're going to jump down here and everyone's going to come up and we're going to shoot questions at us and we'll go from there.